G'day, Halfie. Great question, mate. Now, I'm going to do my best to simulate the process because there are so many platforms out there, and because I have a financial services license, I can't show you a specific platform because it could be inferred as advice, and I can't make recommendations on TikTok that could lead people to take a particular investment decision that may not take into account their own personal circumstances. So forgive me if I'm a little bit vague. If you've got follow-up questions, I'll do my best to provide you with the factual information that's going to guide you on this. Now, the great thing is there are some phenomenal resources online that are put out by a lot of the brokerage platforms and also the micro investing apps that exist. You could just search for how to buy shares Australia, or how to buy ETFs Australia, or how to buy an index fund Australia, and it can walk you through the process. Now, I'm going to do my best to use the Lucid chart to walk you through the step-by-step process, and this should apply from a fundamental standpoint to pretty much all of the platforms. I'm going to describe two ways to go about this, so hopefully this gives you the ammunition that you need. The best thing to do is just to get started. Find a particular platform, go and look at some of the comparisons, pick one, and start with a really small amount of money. So once you've got some real money in the game, many of them allow you to start with like $5-10, right? You don't need a lot of money in order to get started, and the best way to develop what we call tacit knowledge is for you to go through the motions and to experiment yourself. So let me show you. Okay, so the first structure that I'm going to share with you is using a broker platform. So some examples of a broker platform could be NabTrade, could be ComSec, could be CMC Markets, could be Interactive Brokers. There's plenty of them out there. You can just jump onto Google and you can find a comparison. Let me just show you quickly. So I just jumped onto Google and I searched for share trading, share broker platform comparison. I clicked on the first one, Finder. Finder's a good comparison site. There's CanStar, there's others. And then you'll see here that I'll be able to pull up a comparison of all of the different platforms, and it talks about price per trade. Does it give you access to international? Is there a monthly fee? So on and so forth. This doesn't give a lot of description, but this kind of just talks through how to compare and what those details are, okay? So when we choose a broker platform, we connect this to your bank account, okay? So let's say that you bank with Commonwealth, you link this to your bank account, and this basically is the account that allows you to process and transfer money in between the cash account for the broker platform and your bank account, okay? So what's usually going to happen is that you're going to need to transfer money from your bank account into your broker platform cash account in order to place trades. Most broker platforms, to my knowledge, don't allow you to automate this process, but this cash account that you have at the broker platform has a BSB and account number, so you can set up an automated transfer on a regular basis. However, you can't necessarily automate the process of buying the particular shares. I can cover that off in more detail in a separate video if you like. So basically what this is the broker platform is essentially like an administrator, okay? They're there to do the back end, to essentially facilitate the trades, to provide you with the technology to find all of the various shares or ETFs, and essentially allow you to place those trades. And they will usually charge a brokerage fee every time you place a trade. It will usually be either a flat dollar fee, or if you place up to a certain trade, they might charge you a percentage. So that's really where we want to do the comparison. So for example, the platform that I use, I believe charges $15 per trade under $10,000, and then they charge a percentage. I can't remember exactly what it is. Now, what you then need to do is you need to then on that platform find the shares or the ETFs that you may want to invest in. And you do so by doing various research that they've got on that platform or finding what those particular things might be. So let's say, for example, you want to invest in an ETF or an exchange traded fund. And just to give you an example, I've just gone and searched for ETF comparison Australia. I'm going to jump onto the CanStar link for a second, and there's a lot of different ETFs. So for example, let's say that we're looking at the Vanguard MSCI Australian Large Companies Index, and that is the one that I want to use. Then I just copy this. Once again, not a recommendation. I'm going to paste this into Google because I want to get the ticker code, and the ticker code for this is VLC. So what I would do is I'd go into this platform, I would use the search functionality to find a VLC, and then basically I'll be able to say a market whereby I'll see what the buy and sell price is, and I will have the opportunity to look to execute that trade. And it'll look something like this, guys, right? That they'll say there'll be a buy price and a sell price. There's usually a bit of a spread. And then basically it'll give you the opportunity to make a bid at a particular price. So for example, this is just another platform just so you can have a bit of a look. It'll say, okay, what am I doing? I want to buy. I put in the code. So in this case, it's looking at Woolworths. What quantity do I want, or what value do I want? And then do I want to set a price? So for example, let's say that this particular stock is trading at $28. Maybe I think the market's going to fall and I want to place a bid at $25, right? And then if that ever hits that price, then that will go through. Or I could do it at market, right? Whatever the market price is, I can buy it at that particular price. I can also set an expiry that it is good for the day. And then I will proceed. It'll give you a bit of a calculation. It'll usually tell you whether you've got enough money available, and then essentially proceed, and that order will sit there until it is placed. So in my experience, the challenge with this is that obviously it is quite a manual process. There's a little bit of a learning curve. Once you go through the platform, you understand it, watch some videos on YouTube, read some books, it's relatively straightforward. But there's a few steps. Bank account into the cash account into placing the trades, and then obviously this needs to be manual on an ongoing basis. There is a simpler way, which I'll share with you shortly. So the simpler way is to use a simple platform, like a micro investing app. There are multiple micro investing apps, and you can once again just jump onto Google, search micro investing apps, and you can have a look at some comparisons. Let's say, for example, we're going to look at the Forbes article that'll do a little bit of a comparison here. And as we can see, if we scroll down a little bit, it gives you a whole heap of information on this that's worthwhile looking at. There's Comsec Pocket, there's Perla, there is Sharesies, there is Spaceship, and there is Raise. So you can basically pick one of those. But the benefit of this, if I just come back to my diagram, is that it takes out a lot of the complexity. So the benefit is that these apps have is they normally have a direct debit functionality from your bank account. So you can set up a regular investment. You can choose, typically you've only got a small selection of investments, and they're usually pre-mixed investments. So for example, you might find a high growth fund or a balanced fund, and similar to like your super, it'll be invested around the whole world, okay? And it basically will allow you to automate. Some of them even round up your transactions. So let's say, for example, you go and buy a coffee for $4.50, it'll round up 50 cents and invest it for you, which is pretty cool. Some of them have functionality like that, which is great. But the benefit is that you essentially have the ability to automate this. It's very convenient. You simplify the number of options that are available. You typically pick one. You choose whether you want to do a manual ongoing contribution, an automated contribution, or roundups if that functionality is available. And it's basically set and forget from there. The downside is that as you continue to grow and scale these particular platforms and you get investments over a certain amount, they can become more expensive. So you just need to weigh up the pros versus the cons, but it can be a really great way to get started with relatively low complexity and the benefits of really great apps that are quite intuitive and easy to use. I'm just conscious of the 10-minute limit here on TikTok. I'm already at 7.5 minutes. This should hopefully just give you a little bit of a crash course of the two main options to go about this. As I mentioned, go and read some of these reviews and these comparisons, get an understanding of the vernacular, set up some accounts. Usually all of the accounts are free to set up, right? So you can have a little bit of a play. Some of them even allow for dummy accounts, so you can have a bit of a play and see what it looks like if there was money in there. And of course, when you're comfortable, put some money in there. And once you've got real live money in it, it just changes the way that you go about the experience. You're now active learning because you've got some skin in the game, so to speak. And it can be a really great way to get started. Remember, when we're dealing with money, we're dealing with investing. This is about creating what I call money muscle memory. It's like going to the gym and like thinking you're going to become Mr. Olympia on day one. You're not going to go and squat 300 kilos day one, right? You're going to start with the bar, you lift some weights, you're going to build some confidence, get your form right, and then we can add weight to the bar, right? We want to make sure that we're focusing on progress over perfection, and money is no different. So the idea is to break the ice. The hardest momentum you will create is initial momentum. Continue to build on that momentum over time, and you'll get more confident, and it'll become a whole lot easier once you start working with it. So if you've got any questions, let me know in the comments. I hope this is valuable.